Hello, everyone, and welcome to another episode of the Beyond Fulfillment podcast. I'm your host, Dave Goulas, and this week I have the leader of the investment banking team at Left Lane Associates, Nicholas Somos. Welcome, Nicholas.
Hi, Dave. Thanks for having me on.
Yeah, thanks so much for taking the time. If you could, can you let us know what Left Lane Associates is and how it came to be?
Yeah, happy to. Left Lane Associates is a boutique investment bank that focuses exclusively on transactions in the supply chain industry. It's all we do. Our team of 20 professionals has over 250 years of experience working in the transportation and logistics and supply chain industry, ownership side, sales, executive side, on top of the corporate finance and investment banking expertise. So we've been on both sides of the table there. We represent buyers and sellers. We've successfully executed 71 transactions ranging between 5 million all the way up to 912 million in enterprise value since we were founded in 2016. And we work all across the supply chain, asset-based providers like trucking companies and intermodal drayage, 3PLs, asset-light companies, freight forwarders, brokers, all the way up to contract logistics and supply chain management. And then we also work with suppliers to the space. For example, we wouldn't do a healthcare tech deal, but we would definitely work on a supply chain tech deal, as you know, that industry focus is what allows us to add value to our clients.
Okay. And you've been there for I want to say since 2019, is it?
2018, I started in September.
2018. Okay.
Yeah.
Okay. And they were nowhere near that size when you started, right?
No, no, definitely not. When I had the opportunity to join our founding partner, Mike McCarron, he's the chairman of the board today, and our president, Peter Stefanovich, and managing partner. Um, it was Peter, myself, another investment banker, and an office support person. So there was basically four of us day to day in the office, and Mike was out there, sourcing deals and bringing in business. Today we're 20, 21 plus a couple of co-ops and interns that we have at the firm. So we've grown quite significantly as we brought on more deals and expanded our capabilities. From Canada to the United States, and now we're working on deals. Potentially Japan, and we've got some transactions that would take us into Europe. So the business has grown quite significantly since I started.
And what's that process been like, going with just a couple people and then scaling out to basically five times the amount of people and like you said, 70, 71 transactions?
Yeah, 71 close so far. It was definitely challenging. One I guess characteristic of the investment banking industry, our engagements have a very small upfront investment in the partnership from our clients, and then it's basically you eat what you kill. We collect a success fee when a deal closes. So the cycle is long, it's complex, and it's unpredictable when those closings are actually going to happen. So it was important for us to grow our team to be able to properly execute on the transactions that we had while still managing the cash flow. One of the things we identified as being really important there is making sure that we were getting the best return on every minute we invested as people into the business. And one of the strategies we employed was creating functional teams. So we have different experts who work on different parts of the deal process. For example, we have an in-house research team that's headed up by our head of research, Kirsty Boatwright, and her team are responsible for building and maintaining our proprietary database of all the companies in the supply chain industry, what they do, who the C-suite executives or the owners are, making sure the contact information is correct. And that allows us to get to market quickly and ultimately get those deals closed, in as timely a fashion as possible. And then on the origination side, we have Matt McGrath heads up our origination function. That's basically sales and marketing and investment banking speak. And he and his team are out there, I guess, spreading the gospel of Left Lane to the market, and starting to cement more relationships as time goes on. And then, of course, the banking team is focused on origination, which is, you know, getting, building those relationships with people in the supply chain, bringing in the deals, and then we have the rest of our team focused on execution, which is all the analysis, the outreach for the transactions, pitching the deals, either on the buy side or the sell side, and then managing the deal process once we have an offer to due diligence and then all the way through to closing.
Okay. Wow, and it sounds like you've got it well figured out at this point, especially with like almost a fractional work, so you make sure that people don't get kind of tied up and wasting a lot of time duplicating efforts.
Exactly, and everybody is really good at the part of the process that they focus on.
And you mentioned the long sales cycle and the unpredictability of how these things can go. So what's that been like in terms of I've got to imagine there's been some agony where you invest a lot of time and effort in a deal and then it falls apart at some point.
It's very rare. When in a business like ours, you get good at being selective, and part of being successful in that is making sure you're doing business with the right people. We have this adage, I guess, you can't do a good deal with bad people. So we want to make sure that the companies that we engage with are top notch in terms of integrity, and the people that we're working with on either side of the transaction all share that same that all have those same qualities. Um, so once we're engaged with a good deal, yeah, sometimes it may take longer. There may be some work that has to be done before we take the company to market. Sometimes the businesses have complexities where we really have to dig through our network and find the right counterparty for this transaction. Maybe it has to do with the particular niche our client is servicing, and we need to find a buyer who finds that particularly attractive so that we can make sure that we maximize the value for our client in that example.
And so what's the process or what's the timeline typically like if someone comes to you and says, "Hey, I want to sell," and you start going through your database, how quickly have you found you're able to typically match them up with some interested parties?
The typical sell side process takes between 9 and 12 months. There are some that take a little bit longer. There's, the due diligence process is often unpredictable. But in for the average deal, for the average owner, you can expect anywhere between 9 and 12 months. And there's a lot of other work that goes into the process. It's not just, getting a little bit of information from the seller and then matching them with a buyer. We do a full deep dive and pre-deal due diligence internally to make sure that the company is presented properly to the marketplace. And then we leverage, of course, our database, our research team, and our extensive relationships in the industry to make sure that we're marketing that deal to the right people. And we're getting it to the right people at those companies who have the decision-making authority to move those deals forward within their organizations. And then we also quarterback the negotiation process to make sure that we're getting the best offers for our clients. And that's true on the buy side and the sell side. And then during the due diligence process, we work with all the professionals on both sides of the deal to ensure that things are moving along efficiently and quickly at a good pace.
Okay. And how the valuation or the offer price, I mean, do you typically just have, if you're representing a seller, do you prefer that the buyers make offers, or is there typically like a offer you request?
In a typical sell side process, we'll send the deal collateral, a teaser and an NDA out to potential buyers that we've identified that would likely be interested in this deal. They'll then sign the NDA, receive further material on the deal, and then we'll say, hey, this by this date, we're expecting expressions or indications of interest. This is a high level offer. It's usually one page, very quick to put together, from interested parties. Then we'll look at those and we'll consult with our client and decide together to say, here's, let's say, 4 or 5 expressions of interest that make us really want to move those parties forward into the deal process. Then at that point, um, we'll go into what's called pre-letter of intent due diligence. Um, the buyers will get more information on the company. We'll do management meetings and site visits, and then we'll set a deadline and say we want letters of intent. Uh, Letters of intent are definitive offers for the company. It'll have a specific price, a specific structure, specific expectations of the owner post-transaction. And then we'll review those with our client. We'll negotiate those. And when our client is happy to accept one, that's the winner for the deal. And then we'll enter into exclusivity so that the buyer has, let's say 90 days to perform due diligence and then close the transaction.
Okay. And throughout that whole process, right, given that you've a lot of experience at this point, what's some of the biggest challenges in seeing that whole process? Because the way you explained it sounds very smooth, but I can imagine it's not always that smooth.
Um, so our goal and a lot of the value we add to our clients is actually making that process smooth for them, is managing that whole process. Because you can imagine if you're running a business, trying to navigate that, even knowing how to navigate that on your own would be very, very difficult. Challenges, again, by the time we launched the deal, we would have done enough homework with our client to have anticipated and mitigated any potential challenges that can come out of that process. It typically runs very smoothly as long as we're able to get all the information from our client and move things along at a good pace.
Freight shippers, are you looking for a better experience shipping less than truckload? Are you tired of unpleasant surprises, reclass, reweighs, and the invoice always being higher than the quote? Well, experience the difference with SPI Logistics. I joined SPI as a freight agent to offer a better experience to our 3PL customers, and I'm now offering that same experience to freight shippers nationwide. You get the same personal service you've come to expect when you deal with me, and I've got a whole team of experts that help with all aspects of the transaction from start to finish. Click the link below, or you can email me directly. Another question, being that you've been doing it about like 7 years now at Left Lane, what type of changes have you seen in the market between pre and post COVID?
That's actually an excellent question. So pre-COVID, let's say that was the normal environment before the pandemic. In 2020, when the pandemic hit, we saw a shift where there was a lot of uncertainty early on, and some folks who were thinking of selling their company or were on the market to sell hit the pause button and said, "Let's see how this shakes out before we go to market to avoid, let's say, selling at a discount." Buyers were coming to market. Um, uh, Buyers basically increased their interest in doing supply chain deals. So we had a rotation. We had more sell side deals than buy side deals pre-pandemic, and then during the pandemic, we actually had more buy side work than sell side work in 2020. And then in 2021, as the demand started to really hit the supply chain industry and prices started to go up, volume started to go up, and the results for operators in the supply chain industry also started to grow. Um, Folks who were thinking about selling their company or had taken their deals off the market said, "Hey, look, the numbers are looking great. Let's get back out onto the market." And then we saw that balance kind of come back. The deal activity broadly across the supply chain was very robust during 21 and 22. There was a lot of interest in the space. The news that the news cycle picked up the supply chain disruption. So we also saw, there's financial sponsors who may not have been as interested in the supply chain industry suddenly were, "Hey, this is essential. This is something that is very important to the economy." So there was more interest in the supply chain industry from those buyers. And I guess to round out the story, 2023 saw a reversal of that trend. Um, all of us operating in the supply chain industry know that 2023 wasn't the best year for operators. We saw kind of the reversal of that increased demand, which caused volumes and prices to fall, and then results kind of tick down. There's still a lot of interest in deals in the supply chain space, but what we saw last year was financial results were ticking down throughout the year, and it became difficult for buyers to underwrite deals. They'd sign an LOI, and then 1 or 2 months into due diligence, the financial results for the company they were buying might fall a little bit, and all of a sudden, well, we can no longer stick to that deal. There were a few instances where parties said, "Hey, let's take a pause and let's talk again in 6 months." And we're seeing now some of those deals come back, and some of those are the deals that we're planning, not planning, are scheduled to close for us, let's say at the end of March, end of April, end of May.
Okay. Yeah, appreciate that recap. It makes a lot of sense based on what we've seen over the years, particularly with supply chain. Um, Shifting gears, so I looked at your LinkedIn. I see you do a lot of thought leadership on LinkedIn. You post a lot of articles and whatnot. How important has that been to building your business and your pipeline? With the M&A.
It's been extremely important for us, and the results have been fantastic. When we thought about how we were going to build the business, there was basically three pillars. One is supply chain M&A advisory experts. So that's our exclusive focus on the industry, um, and of course, bringing to bear the operating experience that our team has, um, to the transactions that we do. Um, the second step is building deep and lasting relationships, and the thought leadership actually plays into that. When we're out in the marketplace, let's say at the IWLA conference where you and I met, or many of the other industry conferences that we attend or hold board seats on, we can speak really intelligently about the industry to the operators, who we meet there. Right? We understand what they're doing day to day. We understand the challenges that um, that's going on in their businesses, and it also allows us to add value across that long sales cycle. Right? If I might meet you today, you might not think of selling your company for 10 years, but we're still going to chat or catch up every 6 months, and you'll share some information about your business, you may ask for some advice, and we're always happy to provide that. So the thought leadership allows us to stay on top of what's going on in the marketplace. And then it also allows us to convey to people we're potentially doing transactions with that we are subject matter experts on not only transactions, but also on the supply chain industry itself. And that really sets us apart from a lot of other investment bankers or M&A advisors who may not be as active in the space.
Yeah, I totally agree. People want to do business with people they know and that they see are out there providing value and knowledgeable. And particularly in your business too, it's tough to operate as a faceless, nameless company and not be out there really posting content.
Yeah. Yeah, and it definitely helps to get us through the door. As you can imagine, business owners get, you know, you're a business owner, you might get 5 emails a week from, "Hey, I'm a private equity firm, I want to buy your company," or, "Hey, I'm an investment banker, let me help you sell your company." And it's difficult to cut through all that. So maybe seeing our posts on LinkedIn or hearing me speak at a conference, and then I'll run into that person and have a little bit of a better opening, and they'll have seen some of the thought leadership we do. And I've had clients tell me, like, at the beginning I thought, "Hey, this guy's just another investment banker," and then I connected with you on LinkedIn, and we saw the post that you're doing, and I realized, hey, this guy really is serious about the supply chain industry, or the Left Lane team really knows about what my business is going through, and that definitely kind of opened those doors for us.
For sure. Another post too, I wanted to just run through. So it's titled "The Three Costliest Mistakes for First-Time Sellers." And it's underestimating your negotiating power, failure to ensure your long-term financial security, and lacking the resources to generate deal tension and maintain anonymity. And that's one I think that I've seen several times on there. Can you just talk through those points and how important they each are?
Yeah, so the first one on, I guess I'll cover them in reverse order. So the last one about deal tension and anonymity speaks to the deal tension part, speaks to the M&A process when run by an investment banker. Let's say entrepreneurs know other people in the industry. So if I, let's say if they decide, hey, I want to sell my business, I might just call John, who has a bigger company than me. He's down the street, and see if he'll work out a deal for me, right? You're negotiating with one party. You, in that case, you're going to them asking them to do a deal with you. So A, that erodes the leverage that you have in the negotiation. But B, you're not creating any deal tension. Deal tension is created when you have multiple parties interested in the company at the same time. And um, the process that I described earlier, we send out teasers, NDAs, SIMs. That's the book, the deal book. It's a extensive presentation on the company to multiple parties, and then you get a bunch of expressions of interest, and then you go through the pre-LOI diligence, then you get a bunch of letters of intent. We did one deal back in 2022. We got 29 expressions of interest, and then we chose 7 parties to move to the pre-LOI due diligence, and then we got 5 letters of intent from there. So even negotiating those letters of intent, having those options, having 5 parties who want to buy your company, A, gives you leverage to negotiate the best terms for yourself. Um, well, in this case, Left Lane's doing the negotiating on your behalf, and B, allows you to push for not only the best dollar amount, but also the best terms, because there's a lot of other terms that go into an M&A deal that an owner may consider valuable. It's not always who's going to offer me the highest price. It's who might take the best care of my legacy. And that having that option, A, gives you, like you said, leverage, and B, creates that deal tension between the parties. The confidentiality piece is something that's unique to Left Lane. Well, I don't know if no one else does this, but for us, our process is um, the teaser is blind. It'll say, project Amethyst, right? And we reference the name of the company as Amethyst instead of the actual name of the company. Let's say, Easy 3PL. Most investment banks, once a buyer signs the NDA, will have the actual name of the company in all the deal materials after that. We keep that name confidential for one more step in the deal process. So instead, let's say if we send out 100 teasers, we might send out 30 SIMs and get 5 expressions of interest, right? And then choose to continue in the deal with 3 parties. For most investment banks, the name of the company is in the SIM. So 30 parties are going to find out the name of the company that is for sale. In our process, if we get 5 EOIs, expressions of interest, and then only choose to proceed with 3 parties, only those 3 parties will find out the name of the company. So that keeps it keeps the fact that the company is for sale much more confidential. And that's obviously key to maintaining the value of the company while it's on the market and going through the process of being sold.
Ah, okay. Has that always been a strategy, or is that something that you like adapted to over time?
No, that's actually always been a strategy. So our founder, Mike McCarron, he owned a company called MSM Transportation, headquartered here. It's fairly large, and he sold it in the early 2010s. Um, he then and him going through his process as an owner informed a lot of the decisions that we've made, especially the ones that have departed from, hey, this is what most investment banks do. This is standard. So his personal experience, having sold his company, that was one of the things when he sold. He spoke, would have spoken to his bankers, or he, I don't actually know, so don't quote me on this. If you talk to Mike, you can get it straight. Um, but his feeling was, hey, I don't want all these people to know that I'm for sale. I want to limit that as much as possible. So when we were planning out our processes at Left Lane, that was one of the questions, like how can we keep that confidentiality more secure? And the way we run our process is the result of that discussion.
Okay. All right, and we're into 2024 now, and you mentioned you've got numerous deals scheduled to close. What do you see for the rest of the year as far as like the broader M&A market within logistics?
The broader market in the broader market for M&A deals in the logistics supply chain industry is expected to rebound a little bit from 2023. So 2023, we saw fewer deals and we saw smaller deals. So, and when I say smaller, I mean they're still big. Like mid-market and lower mid-market deals could be 20 million, could be 50 million, $100 million. We saw fewer of the really big transformative mega deals. In our space, in the mid-market space, it seemed that buyers were preferring to deploy, let's say, maybe the same amount of capital but spread it across one or two deals, as opposed to saying, hey, let's go find one big one. And that's diversification, just because the industry itself was a little bit choppy last year. We also saw some folks were more risk averse given the volatile nature of the industry last year. So buyers may have sat on the sidelines, and waited for either the right deal or the market conditions to solidify. So, talking with CEOs across the industry and company owners across the industry, the sentiment that we're hearing is that the bottom in the market is in, and the supply chain industry should start to recover. The timing, everybody's got a different thought. We're thinking somewhere within the next 2 quarters, we should start to see things consolidate, and then the expansion part of the next cycle should start shortly after that. In terms of deals, we're seeing buyers are more interested. Hey, let's start looking at potential acquisitions again. And now that the bottom is in the market, folks who want to sell their company, let's say looking at retirement or have reached a plateau and say, hey, I want to find the right sponsor back strategic to help me grow my business and remain invested, they're coming back to us and saying, hey, I think now is a good time to go back to the market. And we're giving the same advice to our clients. If someone comes to us, we'll look at their company, and some of the advice we might give them is, now may not be the best time to do the deal. You may want to you may want to think about looking at the market in 6 months or a year, and then we can help them and guide them to approaching the market in the best way.
Okay. And if people want to get in touch with you and learn more about what you do, what's the best way they can do that?
I'm very friendly. You can always reach out to me on LinkedIn. Dave, you can absolutely post my email as well when you post the video. So please reach out to us on LinkedIn, and we have representatives going to all the big supply chain conferences. I'll be at the IWLA conference. If you run a warehousing business, I would highly recommend you check out the IWLA, the conference. Actually, that's where you and I met, Dave. Peter Stefanovich and Matt McGrath are going to be at the TIA this year. My colleague Alex McKinnon, he's going to be at the TCA convention, and we'll be in person at a lot of the supply chain conferences. So feel free to reach out to us there as well.
Okay, excellent. All right. Well, Nicholas, thank you so much for being here. That's all the time we have for now. We will see you next time.